Hello guys, here is Hub, and today we are going to walk through Warren Buffett's life. This is the second part, so if you have missed the first video, make sure to check the link in the description down below and in the upper right corner. And to be updated with the new videos that are coming out every single week, make sure to subscribe and turn your notifications on. But now, let's get started. In the last video, we have stopped in 1970, where Warren Buffett had become the CEO and chairman of Berkshire Hathaway. Now, in 1973, he started buying Washington Post stocks through Berkshire Hathaway, and in 1974, Wesco Financial. The SEC conducted an investigation on a possible conflict of interest but didn't find anything. So, in 1977, Berkshire acquired Buffalo Evening News for $32.5 million. He also made a notorious purchase into National Indemnity Company and Geico. In 1979, he started buying stocks in ABC, and when Capital City announced a $3.5 billion stock purchase, Buffett got a 25% stake in the newly formed company. He later had to sell a part of his stake due to ownership rules in the media sector. Another notorious purchase was the 12% stake in Salomon. This firm unfortunately made too many risk trades, more than what allowed by federal law, and these trades ended up turning south. In the early 90s, the firm started doing very bad, and Buffett took the nominee of chairman as Salomon until the crisis got solved. In the same years, Berkshire made its best investments with Coca-Cola, which had a very bad year due to the release of the new taste, which was a complete flop. And Berkshire still owns this position until today. In 1990, Buffett became a billionaire and purchased General Re, one of the major reinsurance companies in the world. Berkshire shares suffered greatly during the crisis of 2007-2008. He had the possibility to buy big into Lehman Brothers, but he saw that the firm was too troubled and couldn't be saved unless federal money came in, which didn't. Anyway, Buffett got out stronger because he had the possibility to buy big, especially preferred stocks in Goldman Sachs, one of the most important investment banks in the world. Wells Fargo, Banks of America, Bank of New York, Mellon, US Bancorp, PNC Financial, M&T Bank, etc. In 2008, he was the wealthiest man in the world, but he later got surpassed again by Bill Gates, which by the way we are going to be covered shortly, so make sure to subscribe and stay tuned with us. In 2012, he was diagnosed with prostate cancer, but he was able to come out of that stronger. He continued making major purchases, and now Berkshire has a market cap of over $500 billion. So, what is his investment strategy? What is he looking for as an investment? High return on assets, good company management, low price earning ratio, strategic advantage, high dividends, productive assets. What all this mean? Mr. Buffett looks for companies which are capable of a great management. He does not want board seats fight like Carl Icahn, Bill Ackman, Paul Singer, and etc. He wants companies that are not overvaluated, so he looks for stocks that have a small multiple and the company earnings. What he calls MAOT is a strategic advantage on competitors. It can be brand recognition like Nike, Coca-Cola, or reach like Facebook, Instagram, Twitter. Better services like Amazon, which delivers products very fast and are cheaper than competitors. He wants high dividends so he has more money to reinvest in, so he can compound faster. He likes productive assets. This means an asset that produces wealth like a company, while commodities like gold are not productive. Buying those kind of assets make the investor money only if in the future somebody will be willing to buy the same thing for a higher price. But in the meantime, that asset does not make anything. Nowadays, Buffett has become more involved in philanthropy and politics. He has donated several billions of dollars to charity through Bill and Melinda Gates Foundation and through the organization managed by his sons. He started the movement of the Giving Pledge. Those who signed to this promised to donate more than half of their net worth after that. He helped the Obama administration in making of the new tax regime. Even though Warren Buffett is highly respected, he received a lot of criticism. Ali Schroeder, the author of the Buffett biography, by the way you can find the link in the description down below, so make sure to check it out. said that aside from the facade he has in public, he is generally angry and has an extreme determination, which sometimes is too much. She made the example that on 9/11 he was extremely mad at General RE CEO because Buffett told him to reduce his risk in the World Trade Center, but the CEO didn't. Another bad review of him came from the book Barbarians at Gate. You can find the link in the description down below, so make sure to check it out. Where Buffett said Solomon CEO should be fined to finance what became the largest hostile corporate takeover made by KKR billionaires Henry Kravis and George Roberts, which we'll be covering later in the coming videos, so make sure to subscribe and turn your notifications on so you can be updated with the coming videos. Let's get back. He reportedly said he was open towards the buyout of RJR Nabisco because the tobacco business was a very good one. Cigarettes cost 1 cent to make and they are normally sold for $1. They're addictive and there's a high brand loyalty. So what we can learn from Warren Buffett is have a long-term view, find your true passions, invest in knowledge, be patient for the right opportunity, and do not let emotion take the best of you when you have to invest. This was the second part of Warren Buffett life, so make sure to subscribe, like this video. If you have missed the first video, you can click right here and check it out, and make sure to check out all our videos that will help you in your financial journey. Here's Hustle Hub.